I think, is a great interim step between coal and clean energy, but it's a fossil fuel. There's certainly carbon being emitted from that. And so I think this whole thing around, stranded energy is real. And I think there is a certain amount of electricity that is acceptable. I wrote a paper for Bitcoin Magazine a few years ago, which was like, what Bitcoin miners do is they're essentially providing the reliability and stability to the network, which keeps Bitcoin safe. Nobody goes to Wells Fargo or Royal Bank of Canada and says, you're using too much electricity in keeping our the security and the safety of the digital cash payments and the cash payments alive. Like, nobody's knocking on their door saying, this is a waste. But as Bitcoin continues to grow and the hash rate continues to grow, the hash rate has gone from like 8 exahash to like 170 exahash in the last couple of years. That's a lot of electricity. I think something I read this morning was, the amount of electricity, used for Bitcoin is like, now that of Argentina, where it used to be like New Zealand. And so while I think there's an acceptable amount of electricity that should be consumed in Bitcoin, it's important. It's important to the world ecosystem, and as a way of countering the declines in fiat. My gut tells me that the potential black swan event for Bitcoin is not going to be the securities regulators. It's going to be the environmental regulators.
Yeah, no, valid point. And I think the Bitcoin mining community should be concerned about that and continue finding ways and innovations and technology that allows them to do this in an environmental friendly way. And I believe there is technology out there, but the problem comes back to the economics behind it and whether it's feasible to continue doing that and maintaining a sustainable profit or profit ratio. But to conclude on this and just the final points from you on someone who's very new to decentralized finance, very new to proof of stake, what steps do they have to take to get their feet wet and start, allocating some of their personal portfolio into proof of stake? And tell us more about tokens.com and how that works.
Yeah, so tokens.com, we're aiming to be publicly listed before the end of Q2. And when we really take the hard work out of it for investors. So if you're an investor today and you want to get access to decentralized finance, it was the same challenges presented to people that wanted to get exposure to Bitcoin. You got to convert your fiat into digital assets, first probably Bitcoin or Ethereum. You got to open up accounts at different places now, Coinbase or wherever, create your digital wallets, understand how to secure it. And then, there's hundreds of different blockchains that you can stake. We take all that hard work out for you. So at tokens.com, we're currently staking ETH 2.0, Polkadot, and Oasis Rose token. We've done the research there. Excuse me. We have pretty good ties into Silicon Valley and some of the people there. And we have conversations as to what are they backing? What do they like? And our track record so far at tokens.com is through our investments, they've appreciated the tokens that we're using for staking. So this is our CapEx, has not depreciated the way it would in crypto mining. It's actually appreciated about 130% so far. And we're yielding, so the return or rewards on providing that service is close to 13%. So think about that. The assets have appreciated by 130%, and we're still getting rewarded the same way a crypto miner would at that same level. And so we're looking at projects, we call them layer one blockchains, which are what I call the building blocks to DeFi. So when you look at things like Uniswap and all these things that people use for trading, borrowing, lending, and I think in 3 to 5 years, all trading is going to move into a decentralized finance format. But we're betting on sort of the Amazon Web Services. It's the building blocks underneath that are used to create these different platforms and applications. We're not betting on whether it's going to be, MySpace, Instagram, or Facebook, or whatever else to win, in the mind of the users. We want to be the plumbing and infrastructure underneath, like the Amazon Web Services. That's who we're supporting, the tools that get built on. And so far, I think that strategy has worked out pretty well. We've raised, we're going to be closing in the next few days, a $25 million private placement. which follows a $2.5 million private placement we did last year. Company's doing pretty well. And like I said, I have high hopes for when we're publicly listed. I think our valuation is very attractive relative to where other things in the blockchain space are trading. And unlike other startups, we're revenue positive and we've had a pretty strong track record so far.
So once you go public, retail investors who end up investing in your stock can earn yields off of the coins that are mined as well, or?
No, so we're not selling to retail. This is going to be similar to Hut 8. The money, the investors, the money that we raise, we will use that. We will stake it. We will accumulate the yield and the appreciation. And then over time, we will make a determination if we want to pay that out to investors. But similar to Hut 8, the strategy is we want to hold it and provide people exposure to that. So you say, I would like to have exposure to DeFi and I don't know how, and I don't want to go and create an online wallet and figure out cold storage and all this stuff and what to buy. We are that conduit. We do the work for you. We will have the tokens that we are staking and accumulate that yield. That will be disclosed publicly, and that was what will create the value for shareholders.
Okay. And for those who are interested to generate their yields off of these coins, they should go directly on an exchange and do that? Or?
Well, you can do it through Coinbase if you want. But for example, to buy ETH 2.0, based on what I know, you can't buy it off Coinbase right now.
You have to have a minimum of 32 Ether in your wallet to be able to stake, right?
And you need
there's a threshold.
Have some scale. You got to lock it up as well. And so we provide liquidity on the one side, even though we're locked up on the other side. Buying Polkadot is fairly also, if you're buying it on scale, is not that easy. And then the other one that we're staking is the Oasis Rose token. That came to us. That's backed by Andreessen Horowitz, Pantera, and Polychain. We got in on the pre-sale for that based on our contacts. That's up 300% for us and yielding 18%. The only group that's custodying that right now is Anchorage. So we take the difficulty, we take all the work out of it, and it's not that dissimilar. It's a lot more work than buying Bitcoin, but people are still buying Bitcoin ETFs and Bitcoin funds, even though buying Bitcoin is probably the easiest thing you can do in the digital asset space. What we're doing is a lot more complicated, and I think providing that public vehicle for people is going to be attractive.
Yeah, there's a lot of research that goes into it too, and it's very interesting to see how many of those infrastructure type tokens or the AWSs of the blockchain world are surfacing. There's a lot of them out there, and there's a lot of research that needs to be done to vet the ones that have future potential, and I think tokens.com does that for people.
Exactly.
Yeah, great. Well, there you have it. Andrew Kiguel, tokens.com. Thanks for being with us.
No problem. Thank you.
Thanks for drilling into crypto with us. If you enjoyed our discussion, please give us a like on your podcast app or social media, and don't forget to subscribe. Join us next time when we will deliver more perspectives on crypto asset mining, energy markets, and the global financial revolution.